Hey, how's it going everybody? Welcome to another RF Crypto video. On today's markets, we see a small decrease. The markets are trading laterally. We see a 1.12% decrease and the current global crypto market cap is standing at around 1.9 trillion, close to the $2 trillion mark. Obviously, Ethereum once again exaggerated. The markets are down by 1.12%. Ethereum is down by almost 2%, which is always the case. Whenever the markets move, Ethereum moves in an exaggerated manner. So if the markets move down, Ethereum moves down but with a greater force, and vice versa. The markets are trading with some of the tokens going up and some of the tokens going down. For example, Bitcoin and Ethereum are down, XRP is up, Terra is down, Avalanche is down, Cardano's down, Cosmos is up, Litecoin is up, Near Protocol is up. So it is a mix and match of the movement of the prices of crypto in the market, and this is mainly due to the fact that there is decoupling and there is a fact of a lot of the coins in the markets are now uncorrelated with Bitcoin, or at least the level of correlation have decreased. So they have coin specific factors which causes the prices to move. So even if Bitcoin goes down, the prices of some specific tokens might go up because of factors that do not affect Bitcoin and only affect that certain coin. And this is what's happening. And this is a clear example of that. Bitcoin's dominance is currently at 43%, which is quite high. This makes sense because a lot of people are looking for safe havens in a time of crisis. We don't know what's going to happen in the future. We don't know if there will be any escalation in the conflict, and so people tend to go for safer assets like Bitcoin and gold, as I said before. And a lot of people prefer trading in crypto rather than gold. So what is crypto gold? Bitcoin. So that's why we see 43% of all crypto market cap in Bitcoin, up from 38% from the last few months. So looking at the Bitcoin chart, we see it trading between 41,700 and 46,000, and this is the band of support and resistance that it's currently testing. We see that the wick almost reached 46,000 here, but then it got sold off, and it will continue to test these levels until such time that there is some sort of news or there is some sort of factor that causes the price to either go up above this $46,000 level, testing the new resistance level of 50,000, or it could go down below the $42,000 level and test this $40,000 support level. So at the moment, just so that I'm clear, the resistance level is at 46,000 and the support level is at around 41,700. And this is the band where it will most probably be trading at if Bitcoin continues trading laterally. Leverage took a big drop when all the shorts got flushed out of the market a few days ago when the price of Bitcoin went up. However, now it's starting to pick up. This is due to the fact that there are a lot of new long leverage positions in the market because now people are less fearful, people are a bit more greedy, and people think, there is a momentum going on. The price of Bitcoin might be going up even more than it is now. It might test the $46,000 resistance level and it might even overshoot it. So let's make the most of it. Let's make the most profit out of it. And so they leverage their position to try and make the most out of their money. And that's why we see this small spike here. And I think that without any sort of drastic movement in the price of Bitcoin, this will tend to go up, back up again to almost all-time high levels or even higher than that. On some news, Russian consumers and firms are feeling the impact of sanctions as the ruble keeps diving. So the ruble fell once again today and is now worth around $0.009 or around 26% less than 1 day after the invasion of Ukraine. So if you look at the chart, it fell massively. It saw some recovery, but it's still down by about 24 to 27%. Not a good sign for the ruble, not a good sign for the people who have lost about 30% of their life savings. So if they had $100,000 worth of ruble in their bank accounts, now it's only worth $70,000. And they can't even access that because access to money in the banks are now heavily restricted. So in the period between February 24th to March the 1st, footfall in restaurant dropped by up to 50% with revenues for many chains dropping 20 to 70%. And if these sanctions are imposed for very long times, I'm speaking about time frames of over 3 months, we'll see a lot of Russian businesses closing because they still have to pay rent, they still have to pay employees, and they won't be able to sustain themselves without any sort of significant revenue. or at least the amount of revenue needed to break even. Also, beauty salons have seen a massive decline in trade, obviously, because people are less focused on non-essential things and they're focusing more on getting most of their money's worth or just getting the bare essentials. The flow of customers to fast food restaurants, interestingly, has increased, with Burger King Russia saying that it recorded double-digit growth in revenue and traffic in the last week compared to the same period in 2021. And this makes sense because people are feeling the brunt of the sanctions, people have less money, and they tend to go for fast food because it's cheaper. Shopping malls are also seeing heightened activity. This is mainly because people are desperate to spend their ever depreciating ruble savings on electronic goods and other items that could retain value in the case of a massive crash, which they can then use to pawn for food or for foreign currency or even for gold or Bitcoin. And also, the president has signed decrees aiming at fighting the economic fire, including measures that allow banks to limit and block the withdrawals of cash and other assets to overseas accounts. This is very, very concerning, especially since a lot of people have savings in the bank and they require that money in order to survive. And limiting the withdrawal of cash and just the withdrawal of money or the spending of money will lead to a massive domino effect where bank runs will start to become common once these decrees are expired. It could cause these banks to suddenly collapse like how Lehman Brothers did in 2008. So they're saying that Putin wants to fight economic fire. He's fighting fire with fire. Drawbacks of centralization. Moscow Stock Exchange remains offline amid ongoing crisis. So the Central Bank of Russia once again suspended trading on the nation's leading Moscow Stock Exchange. It will not open the exchange on Thursday. And trading on this exchange has been halted since February 25th. It's insane to think about it. And on a monthly basis, the exchange index has lost over 34% of its value, not adjusted for inflation, as Western leaders have imposed crippling sanctions on Russia in response to this conflict. And this is extremely concerning because now people don't even have access to their stocks. They're not even being able to sell it or trade it in order to get cash to invest in other safer assets. And once the exchange finally opens, it'll open at such a depressed rate that people will probably lose half of their investments in one go. And theoretically, whether centralized or decentralized, crypto exchanges are free from such intervention. So crypto exchanges are open 24/7, 365 days a year. You cannot stop it from trading. In addition to their sheer numbers, centralized exchanges servers can be spread out worldwide or do not disclose their server locations. So that if one server gets shut down, there are obviously a lot of other servers or nodes that are available to keep all the systems online. And it's a massive advantage of blockchain and crypto. Also, another thing is that it becomes immune to bans. They can ban exchanges within their borders, but cannot enforce a ban on crypto trading. That's why governments are saying, oh, we're going to ban Bitcoin. You cannot ban Bitcoin. You can ban the trading of Bitcoin within your jurisdiction, but Bitcoin will live on forever and ever. Because even if you destroy a couple of nodes or a couple of servers, there's so many nodes in the world that keep the system online that Bitcoin trading cannot be destroyed at all. As for decentralized exchanges, which is even better to avoid bans, their peer-to-peer nature typically enables anyone with an internet connection to link their wallets and swap crypto, obviously making it difficult to enforce any type of ban altogether. This is a massive advantage of decentralized exchanges, and this is why there has been a big push to get most of the exchanges sort of decentralized. So the state of New York is ramping up blockchain monitoring to enforce sanctions against Russia, and they've ramped up a gear with the Department of Financial Services, expediting the procurement of additional blockchain's analytics technology. So what they want to do is they want more technology in order to analyze the blocks, so the transactions that take place in several blockchains, be it Bitcoin, be it Ethereum, Solana, Polkadot, any of the Bitcoins, because all of the transactions are public, so anyone can literally see it. But because it is anonymous and because you cannot really see who owns a wallet based on the public database, blockchain's analytics technology is necessary in order for these government finance officials to sort of analyze the blockchain transactions and determine where the transactions are coming from, where the transactions are going, and to ascertain whether it is coming from a sanctioned entity or sanctioned person. And they can do this. It isn't very difficult if you have the right tools. And I think this is very, very important, as it will help with setting up regulations in terms of fighting money laundering in order to fight corruption, because blockchain in itself is very transparent, and having the technology to analyze every single block just makes it better in terms of setting regulation and expediting the homologation of all of these regulations so that people can trade crypto freely. So China's digital yuan is set for local adoption with airport and banking drives. So China's digital yuan is edging ever closer to a nationwide rollout, with banks, airports, and provinces looking to boost their adoption efforts following last month's Winter Olympics and ahead of the Paralympic Winter Olympics. So the government really wants to push for a digital yuan and sort of ban cash. And this is mainly because if you have everyone using digital yuan, it gives the government greater control. Because it is set up on their own ledger technology, they can monitor every single transaction that goes on between its citizens or between companies. With cash, you cannot do this because sometimes it is untraceable. But with a digital yuan, you can trace every single transaction. And this is what they want. They want control. They want to know what everyone is doing with their money. It's already starting because small and medium-sized Chinese banks are throwing themselves into digital yuan. Earlier this year, two smaller financial institutions announced that they would no longer handle banknotes and coins and would focus mostly on digital yuan. And this is only the start, and the domino effect will be such that most banks will be like this. They will stop accepting banknotes and coins, and basically they'll force the Chinese citizens to adopt digital yuan. And it's inevitable. It's just about control at the end of the day. Tencent files for patent related to virtual concerts in the Metaverse. Tencent is a massive company, by the way. They filed for a virtual concerts patent with the Chinese National Intellectual Property Administration, which is basically their trademark and copyright regulator. On December 31st, Tencent held China's first ever virtual concert in the Metaverse, which was a New Year's celebration called TME Land, seeing over 1.1 million fans join in over the duration of the festival. Tencent has also acquired LA-based animated concert company Wave, which uses motion capture technology to create virtual concerts which are extremely realistic. Wave concerts have been extremely successful in the past, and their popularity is only growing. One example is The Weeknd, which is a very famous artist, used Wave services to broadcast a virtual concert live on TikTok in August last year. It drew approximately 2 million viewers globally and raised $350,000 for the Equal Justice Initiative. Tencent is a Chinese company and it's subject to Chinese regulations, and the regulations have been anti-blockchain, anti-metaverse, but if a lot of companies are applying for metaverse trademarks in China, there might be some regulation leeway in order to allow them to operate. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the content, please leave a like, please hit the subscribe button, and share this video with your friends and family. Invest wisely, and cheers.